Have a listen to this. Have a listen to this.
Interest rates are higher. I know people don't like that, but you should be welcoming the stronger economy.
And maybe a deal has a point about the machinery of capitalism being oiled with the blood of the workers.
The United States is a country that has always paid all of its bills.
Lannister always pays his debts.
Don't let the bastards get you.
Hello and welcome to Comedian versus Economist. My name's Adam and we're joined as always by my little older brother and real life economist, Thomas. Hi, Thomas.
Yeah, g'day Adam. How you going?
Doing very well, thank you. Hey, as always, we're looking at charts on the show. If you want to follow along, you'll find them on Facebook and Instagram at CVE Podcast. Massive show coming up, Thomas. Audio equipment tops the list for US tariff pass-through. Perhaps they need a high-pass filter. Little audio engineering gag there for you, Thomas. And we're in interest rate limbo. The dance, that is. How low can they go? And have you ever faked being busy at work? Well, some data that took me literally hours to put together suggests a lot of us have. But first, Tesla la. Thomas, the French are turning their back on Tesla. What's going on?
Tesla la. Yeah, we talked a little bit about the downturn in Tesla sales and the collapse of the secondhand Tesla market a few weeks ago. The latest development is that a bunch of French Tesla owners are suing Elon Musk, claiming that his extreme right posturing has reduced their ability to enjoy their car.
To be clear, again, this is like 10 blokes in France, right, who are joined together to sue Tesla. So this new story comes out. And again, I think I made the point last time. It's like I'm not sure how high conviction broadly Tesla owners are about Elon Musk's stance, but this is just a few squeaky wheels in France who are unhappy. And maybe, possibly, speculation, maybe there's something wrong with their Teslas and that they can't get fixed under warranty. Maybe it's got a squeaky wheel. And
they're on leases. So they're not even like seeking compensation. They're just trying to get out of their lease agreement.
Right. Right. Yeah. Okay. Well, let's assume that they've got a case. So where are they at?
Well, I mean, I don't know how they'll go, but I feel like the argument is reasonably sound. They're saying in the statement from their lawyers, it said, because of Elon Musk's actions, Tesla branded vehicles have become strong political symbols and now appear to be veritable extreme right totems, to the dismay of those who acquired them with the sole aim of possessing an innovative and ecological vehicle.
So they're kind of likening them to like a swastika or some sort of like
swastikas.
Swastikas.
Swastikas is the term. Yeah.
Right.
Yeah.
That's tricky. Yeah. You can't even set them on fire because a burning Tesla logo looks a lot like a burning cross, doesn't it? So,
yeah, right.
You're just going to attract even more negative press.
Yeah.
Right. It's a long bow. It's a long bow to draw. I'm not buying it.
Yeah. I don't know. No, I reckon, if I was to buy a Tesla now, I feel like I'm endorsing because Musk made the Tesla brand all about himself, and that was a deliberate choice. To buy a Tesla now, I would feel like I'm endorsing Musk and his politics.
Really?
Yeah, for sure.
I just bought a Toyota Corolla, and I don't feel like that says anything other than cheap, practical, and economical.
Yeah, but the CEO of Toyota is not funding far right parties in Germany.
Well, I didn't check. They might be. They could be. My point is, I didn't check if the guy behind Toyota, I don't know what his deal is. Maybe he I don't know.
No. Yeah, no, but this is the thing. Like Elon Musk, he wasn't quiet about his political involvement.
No.
It was flashed it around. And he was the top, they've got a chart here. He was the top donor to the US election by a clear of 100 million. So he donated almost 300 million.
Yeah.
It's a lot
I feel
of money.
sorry for the second guy here, Timothy Millen, who donated nearly $200 million only to finish a distant second on the list. He would have thought when he's writing out the check for $200 million, this will get me I'll be like number one on the donor list. This will get me right inside the inner circle of Trump's inner circle. And whammo, in comes Elon.
Didn't even get him a spot at the crypto dinner he was hosting.
Well, it's a bit like that, isn't it? It's a bit like saying that you can't enjoy crypto anymore because Sam Bankman-Fried kind of committed fraud and did some dodgy stuff. Like it doesn't sort of, you don't get your money back. You don't you bought a car.
Yeah, but this is the whole thing about branding is marketing goes out of its way to make a brand more than just the product. You're buying an experience. You're expressing your identity. This is the whole point of marketing, right? And the Tesla brand has done a 180. And I think it's reasonable. I think people who bought, 5 years ago, when it was a statement of, it was an endorsement of electronic vehicles, it was an endorsement of the energy transition.
Yeah.
And people saying like, yep, I'm going to buy this as a statement because I believe in those values. And then Musk does a full 180. I think people are reasonable. Go like, hang on, this isn't what I signed up for.
Nah, to me, total scam. Trying to get out of leases. Like, what precedent would it set? Like, what happens if what's his name, Tim Cook, the CEO of Apple. Does something bad, right?
Yeah,
and like billions of people all over the world go, okay, I want a new iPhone. I'm moving to Samsung because I don't agree with Tim Cook's stance on. I don't know.
No, it's totally reasonable. You think about Nike with Colin Kaepernick, who was the footballer who took a knee. Yeah. So they got behind him, right, and did a big ad campaign around him, And in doing that, Nike is saying, like, we're the brand for taking a stand, progressive values, equality, justice, right? So if you're buying Nike on the back of that campaign, you're going like, yep, I support that. That's the brand for me. If the brand does a 180, right, and then supports the Ku Klux Klan or something, you've been dudded. I think it's reasonable to say, like, hang on, that's not the brand identity you were selling me 6 months ago.
Depends if any members of the Ku Klux Klan managed a triple-double in the NBA Finals, though. Like, in which case, I'm just saying it's a complex thing. So,
there's a lot of nuance there. You're right.
All right, Thomas, we got some sweet data on US inflation, and maybe a little surprising.
Yeah, well, it's surprised to the downside. So core inflation came in at 0.1. Economists were expecting 0.3, particularly given that we thought we might see some tariff effects. But so far, there's no tariff effects in the headline data, the top level data, which was
so was the tariff thing just a storm in a teacup? Was it much ado about nothing?
I think it just hasn't come yet. Like there is some signs of it. Like you look at audio equipment, that component spiked. It was up 10% in the month. So
random.
Bit random, you say?
Yeah.
Yeah. Well, I don't know what happened there, but
I know you haven't got any, but any reason why audio equipment spiked?
I think it's all produced offshore, would be my guess. Yeah.
Okay. But so are a lot of things. Don't mean to point that out. Like other things are also made offshore. So why didn't they spike? Why didn't cars spike? Or why didn't?
I think it's probably longer lead times, I would guess. Like I would imagine audio inventory is probably, is closer
just
to on time.
Really specific. Like,
yes.
Like, what are we, like, really highly liquid in the audio componentry space? Are like microphones and speakers just breaking down all the time and people needing to buy new ones, and therefore it was affected? I just don't understand why. We're zeroing in on that one.
I don't understand the economics of the audio market. But, this is a macroeconomic show, so I can't help you.
Okay. All right. Well, sorry to all the audio technicians listening. You're going to be impacted, and we don't know why.
I know what. Yeah. Yeah. No, I suspect that they just don't have big stock of inventory like cars. You know,
Right.
It takes much longer. That'd be my guess.
Yeah.
You know,
Okay.
audio equipment's small, so I expect it ships quickly. That I think it's that'd be my
that's
guess.
just true of so many things.
Not cars though.
Like watches or I don't know, like
Yeah.
pick anything that's small and ships quickly.
Yeah.
It's made like if the criteria is small, ships quickly, made overseas, like so much in that pool.
Yeah. Yeah.
Anyway, moving on.
Yeah.
So what does it all
Anyway,
mean?
What does it all mean? Well, I mean, most economists still expect that the inflation's coming over the next 6 months. But the other interesting thing was that, so the CPI data is published by the US Bureau of Labor Statistics. And due to, I don't know if it's entirely due to Doge cuts, but they do have staff shortages there.
Oh.
And in the latest month, they have a direct method and an alternative method of prices. The direct method is you just go out and sample what's in the shops and write down the prices.
Right.
The alternative method is there's some computation and calculations and you estimate what the price is.
Okay.
So normally those alternative estimation methodologies account for 10% of the CPI. But in the latest month, that's jumped up to 30%.
Oh,
And that's like it's never been that high.
right.
Yeah. So
Are you suggesting that's because potentially cuts in the Bureau of Labor Statistics that they haven't got like price samplers going out? They can't afford. Maybe they're all driving Teslas and hand them back.
Right. But that's what UBS reckons. It's staff shortages driving that. So, I mean, it's like a little worrying. Like China does this a lot. Like when they don't like the data, they just stop publishing it.
Yeah,
But
the US doesn't do that, right?
Well, not yet.
No.
But I wouldn't put it past Trump.
Yeah.
So
Well, yeah, especially and as you say, Doge and Musk was in there too. So, he'd want people driving. He'd want people out there driving cars. He'd want them going to the shops to sample prices.
Yeah. So I don't know. I mean, it's I think the risk here, and also because Trump, so the US Fed held rates, but Trump's still trash talking Jerome Powell, called him a numbskull, called him stupid.
Yeah.
Was asking maybe I can appoint myself as Fed chair.
Yeah.
Be a great president.
Yeah.
But I think
he's calling for a 2%.
200 basis point cut.
200 basis points. Come on.
Yeah.
Numbskull.
Come on, numbskull.
What are you doing? Even I know, and I don't profess to have learned a lot about economics even over our journey here, but even I know 2% is wild. That is that's like slash and burn kind of panic station. Some sort of like a pandemic of pandemics has hit. Yeah. We've got 19 pandemics. Instead of COVID-19, we've got 19 different pandemics. That's the kind of environment you have a 2% rate cut at one time.
Yeah. No, it's just bananas. But I think the danger for the US is, so Jerome Powell's up for reappointment at the end of the year and quite possibly won't get it. It's much more likely that Trump's going to appoint a
quite possibly won't.
Or himself.
Is that because the president's campaigning against him? It's tough conditions for J-Dog over in the US, when the president of the United States and all of his billions of funding from Musk and everyone else is like, I'm going to do everything in my power as president to make sure this numbskull doesn't keep his job.
Yeah,
that's a big call to suggest he might lose his job.
Yeah. But like you imagine in 6 months that Trump's appointed some stooge or himself to run the central bank. Yeah. And markets the BLS is still estimating 30% of the CPI data.
Yeah.
Markets are going like, okay, we can't trust the CPI data. That looks dodgy. We can't trust the Fed chair because he's a stooge.
Yeah.
Like, that's a recipe for a bond meltdown.
That's risk on. Risk on.
Great time to buy.
Start generating data using AI. That's when you know it's over. All right, let's take a quick break here. We're back with more Comedian versus Economist right after this. All right, Thomas, we're back. We're talking interest rates again, going lower. Really?
Yeah.
How much lower?
How much lower? Well, yeah, maybe 200, 300 basis points in Australia.
Whoa.
This is what Gerard Minack at Minack advises. He's an independent economist, very good economist. But he's sort of making the point that when you look at the outlook for Australian interest rates, we kind of tend to think about it as a cycle. And so the idea is that the RBA leans against the cycle. When things are too hot, they raise interest rates to slow things down a bit, and when they're too soft, they cut interest rates to push things along. So the RBA is leaning against the cycle. But sort of the assumption there is that there's just a stable cycle around a stable trend.
Right.
And what Minack's making the point he's making is that the trend in Australia is down, and we're just going to head lower and lower and lower. And the RBA is going to kind of have to is going to keep cutting to try to undo the trend, but they can't fight the trend because it's a structural problem. It's not a cyclical problem.
Right. Structural in terms of the economy's just no good? It's just not doing well?
Australia remains stuck in a macro rut. Low investment and fast population growth prevent capital deepening and productivity growth. The result is stagnant real incomes and falling per capita GDP.
Huh.
Yeah. And so this is sort of you look at Australia's GDP is flatlining. Per capita GDP has fallen in 11 of the past 12 quarters. So per capita GDP stinks. And investment is very low. He's got an interesting chart here looking at investment as a percent of GDP. Through the 60s, 70s and 80s, the average was about 12% of GDP. Through the 90s and the 2000s, it was about 8% of GDP. And since 2012, it's been about 5% of GDP.
Right.
So investment just keeps ratcheting lower and lower and lower.
Right. So what do we do? Just don't invest in Australia? But that would be causal to the problem, wouldn't it, if we all stopped investing?
Yeah. I mean, the other super interesting chart he's got here, he's saying when investment's low, earnings growth for corporations is going to be low, you would expect.
Right.
But when you look at, he's got a chart here which compares the forward price to earnings ratio against the 12-month earnings per share growth. Australia really sticks out. So our forward PE is very high, and our earnings per share growth expected is very low. Yeah. So what he's saying, the Australian stock market is priced like America, which is a high growth market, but delivers growth like Europe, which is a low growth market.
Right.
And so Australia is very expensive for the growth that you get out of the market.
Right. Does that mean that there's going to be some sort of reckoning in the future where...
I think there's some structural factors that explain that, and sort of with dividends, discounts and things that there's Australian investors like their companies to pay dividends rather than invest in growth. That's sort of why you get that result. Yeah, but also they're just not, the investment is very low, so they just don't expect a lot of growth. But he's saying it's on that measure. If foreigners looking at the Australian market, it just looks massively overpriced.
Yeah, right. And the RBA with its kind of hammer that it has, its blunt instrument. The only thing they can do is just keep dropping rates.
Yeah. And this is what you've seen, as inflation expectations have anchored around target, the RBA's, but growth. With that low inflation, growth has been very slow, and inflation's tended in recent times has tended before COVID was undershooting the target more than it was overshooting.
So did COVID just bring in like a big sort of diversion? Like, because you're saying this was happening pre-COVID.
Yeah.
Did COVID just kind of like mask some of this stuff that was going on? It kind of just threw all the cards up in the air for a little while, and shit got crazy, and money printing happened, and interest rates went to zero, and all sorts of stuff was going on. But now things are returning to the norm, and the norm is pretty average.
Yeah, exactly. I mean, you can kind of think about inflation coming from two places. One's from the heat of the economy. As the economy's ratcheting up and pumping along, a byproduct of that is inflation. The other place it comes from is a supply shock. When all the inputs in your economy go up in price, that pushes the price of everything up. And COVID was a classic supply shock to inflation. The cost of everything went up, that pushed inflation up. It wasn't because the economy was going strong. And so now those supply chain disruptions have moved through the system. We're back to an economy with low investment and low growth potential. And naturally, interest rates with that context will just kind of drift lower and lower and lower.
Right.
Yeah.
Which is good, but not good. Like, does it bode well? I mean, interest rates will keep going down, which is good if you're a homeowner or an investor or whatever. But for society, this doesn't sound like good news. Like, it sounds like the economy is slowing down, and that's not a good thing.
No, that's right. Yeah, we'll potentially push into deflation at some point. Like, it's sort of like what happened to Japan. All of the growth potential was sort of used up, and then the economy just started drifting lower, and they ended up with deflation. And then you can kind of fight that a bit, but like, you can't. At some point, you can't pay people to borrow money. Like, interest rates have to be kind of positive.
Yeah. You pay me to borrow money.
Yeah. You can shoulder the Australian economy.
Any banks are listening out there looking for someone to pay to borrow money? I'm your man. Yeah. All right, Thomas, finally on the show, you've got an interesting chart here on people engaging in behaviours to look busy during work hours. Talk me through it.
Yeah. Well, actually, I thought this was all workers, but this is just from IT professionals. Oh, no, sorry.
It's my field.
Office workers too. Oh, yeah, 1,200 IT professionals, 6,000 office workers.
Okay.
Like, have you done any of the following to look busy, quote, look busy during the workday?
Right.
Yeah. Number one, logging into work early but not starting work.
Well, this has been going on for centuries.
Yeah.
People used to clock in all the time, get a coffee. I don't know. I don't even think they're trying to look busy. It's just so that they can get flex leave. Yeah. Just start racking it up. I'm here. My work day has begun. Yeah. Yes, I'm reading newspapers and drinking coffee. But no, that doesn't surprise me.
The modern one here is jiggling the mouse to remain active. 20% of people say they do that.
Well, it's all about physical and mental well-being, Thomas. And by jiggling the mouse, you're getting some level of activity in an otherwise sedentary job. So I think that's okay.
Yeah.
They did. I know they did do a lot of that when COVID hit. It was kind of like the working from home is the big one. Like, so we all had to adapt. So I think a lot of these are, remote work focused. That one in particular.
Yeah.
Just so your Slack icon stays green or your Teams icon or whatever. It's like, Adam's there.
Yeah.
Just frantically jiggling the mouse. That's a serious commitment to not working if you have to sit at your desk and jiggle the mouse.
Yeah. Surely that's...
You couldn't do some work while you're there? Nah, I just want to look busy. Like, if you go to that much effort. Fair enough.
The one I love is 12% of people scheduled a fake meeting to appear unavailable.
Oh, yeah.
I don't know. Have you ever done that? Is that possible?
Oh, definitely possible. Yeah. You can schedule You got to be creative with the meeting title and the invitees. Don't invite your boss to your fake meeting. Just jumping into a Zoom call like, shit, what are you doing here? You invited me. What is this? Shit, it's a fake meeting. Didn't mean to invite anyone. I just meant to create an event for myself.
Yeah.
Right.
The other one I love there is sighing to convey stress. 11% of people.
Yes. Yeah. I did both of these things yesterday, almost subconsciously, because the other one was telling people how busy you are. And I was like, who does that? Who tells people like, oh, I'm so busy all the time? Like it's, I don't know. But Bryce rang me yesterday for something and I answered. He goes, how's it going? And I'm like, and I went, and I literally did this. I went, yeah, busy. He's like, yeah, totally get it. So I did literally sighing to convey stress and told him how busy I was within the first 3 seconds of the phone call.
Yeah. Well, at least it was a real phone call. 7% of people are having fake phone conversations.
Yeah, and the same people having the fake meetings. I was blocking out some time for a fake meeting so I can make a fake phone call.
I'm going to have to wrap this up. I've got to jump in the meeting.
I've got a fake, sorry. I've got to go. We've got a fake meeting starting in 3 minutes. Yeah, it's good to see that people are adapting though. It used to be that I remember carrying a clipboard was always the thing. Like if you ever wanted people not to approach you, you just carried a clipboard as you walked around the office.
Yeah, right.
People were like, oh, he's working on something there. Yeah. He's taking some. He's probably surveying how many of us are actually working. I better start jiggling the mouse. All right, why don't we leave it there? That's it for another episode of Comedian versus Economist. Thank you so much for tuning in. Really do appreciate your support and hope you're enjoying the show. Yeah, all for us for this week. We will be back next week and look forward to talking to you again. Until next time on Comedian versus Economist, it is bye for now.
Comedian vs. Economist is a product of Equity Mates Media. All information in this podcast is for education and entertainment purposes only. It is not intended as a substitute for professional finance, legal, or tax advice. The hosts of Comedian vs. Economist are not financial professionals and are not aware of your personal financial circumstances. Before making any financial decisions, you should read the product disclosure statement and, if necessary, consult a licensed financial professional. Do not take financial advice from a podcast. For more information, head to the disclaimer page on the Equity Mates website where you can find ASIC resources and find a registered financial professional near you. In the spirit of reconciliation, Equity Mates Media and the hosts of Comedian vs. Economist acknowledge the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander people today.